Not an easy undertaking from what I know, especially in long-term rental. You've been very diplomatic, Fred. I would call it archaic.
I think people adopt these flex strategies not just for the financial benefit, but they also do genuinely want to bring technology in. So that's another sort of nice part of this.
I find this space super intriguing, Fred, and I see massive opportunities in this space as the businesses are converging.
Flex has a way to do that by saying we're not taking inventory away, we're actually increasing the overall amount of inventory in the market.
You are listening to STR Global Unlocked, brought to you by AGL Atelier, the show where I speak with the leaders shaping short-term rentals worldwide. I am Simon Lehmann, and after 2 decades buying, selling, advising, and investing, I've built a network that spans continents and categories. This podcast brings that network to you. Real conversations, global insight, no PR fluff. Let's get started. Residential real estate was never designed to be flexible. Leases were fixed, buildings were static, and hospitality lived somewhere else entirely. But that model is breaking. Today, we're talking about where short-term rentals, multifamily, and flexible living collide, and what that means for owners, operators, and investors. Before we get started, a quick thank you to Breezeway for supporting STR Global Unlocked. Breezeway focuses on operational side of short-term rentals, safety, quality standards, and execution at scale. What's always stood out to me is that when operators are asked on stage at industry conferences, which technology has made the biggest difference or had the biggest impact in their operations, Breezeway comes up again and again. I appreciate their support of open, honest conversations in this industry. All right, so let's get into today's episode. Today, I'm joined by Fred Lerche-Lerchenborg, founder and CEO of Lavanda. Fred has spent his career at the intersection of real estate, hospitality, and technology, working across investment development and operations roles before founding Lavanda. Today, Fred is helping institutional owners unlock flexible living models, blending short-term, midterm, and long-term stays inside the same asset without breaking the economics, the resident experience, or the brand. This isn't about pure STR conversation. It's a conversation about leases, yield, operations, and where living and hospitality are converging next. Fred, it's great to have you on the show.
Thanks for having me, Simon. Very excited.
So Fred, let's get straight into it. Before we dive into Lavanda, I want to start with you. You couldn't come from the classic startup background. You came from real estate itself, investment, development, asset management. What frustrated you most about residential real estate was being operated when you were an owner or on the investor side?
Yeah, great question. And, for me, it is a very long story in the sense of time frames. And when I was in the investment side, we invest in lots of different things. It was at the start of REITs, so real estate investment trusts, really gaining huge scale, particularly in certain European categories like Germany, but also the US. And it was also crucially at the time of incredibly low interest rates, which went for many number of years. And it created an enormous asset bubble where people raised billions and billions and billions in an unprecedented scale. And what I could also see as a sort of young fund manager in that period of time was the generational shift to rental was happening at the same time. But essentially property was becoming unaffordable, and so rental was happening. From the investor side, what was most interesting was I had many friends, colleagues, etc., everything from KKR to Blackstone, all these different funds, raising huge residential real estate funds. And when I talked to them about how was that capital going to be deployed, in truth, it was very, very focused on the building, the location, and then a nod to resident experience. But actually, when I then asked, like, well, what would happen with short-term rentals? What would happen with midterms? People are changing how they're renting. How are you thinking about that? Honestly, I don't think they were thinking about that at all. I think it was much more of a build and it will come type of thinking, which is totally understandable because the money was made in planning, it was made in just picking your location, and then basically just assuming demographic trends over 30, 40 years. What I quickly realized was that the people who were starting to come up the ranks in those funds and actually doing the money, who was sort of maybe 30-ish at that point in time, they themselves were going on holiday in Airbnb. They were looking for apartments in cities. But the fund strategies had not adapted to that at all. So that was really, really interesting. And then I took a bit of a sort of entrepreneurial exploration through the technology stack because I thought, well, maybe somebody is solving this out there. Maybe somebody's already doing this. And actually, that was an even more antiquated story. So, the reality is that the technology stacks of long-term residential real estate are antiquated and have been for a very long time, is my very strong view. And there are good-ish reasons for that. But all of that was too exciting to kind of not get very interested in. And with the explosion of Airbnb, the explosion of single family short-term rental, STR vacation rental, all of that was happening. But if you looked at institutional real estate, all the money, loads of stuff was being built, but it was all being built on a business plan of long-term rentals. And the reality of renting was fundamentally changing at that time. And that trend, I think, has only increased, right? That's actually pre-pandemic. That's before things that have accelerated midterms. Nomad traveling wasn't even a thing then. And so in all of that, I think we quickly saw that there was something really, really interesting in that if you could solve that, but it was a really hard problem to solve.
That's super interesting. So when you started to look outside, and we talk to a lot of startup companies, and whenever they pitch to us or to myself, they ask, have I missed something, Simon? And it's like, okay, that's an interesting one. And in most cases, I'm digging into the competitive landscape, right? And say, guys, people always think, what we resolve, nobody else does, right? And that's how they start off with, especially when we talk about guest comms and guest experiences and things like that, which is probably one of the most crowded spaces out there right now and hasn't been pre-COVID. So it's interesting how that has changed the landscape. But where you're coming from, I can totally relate to. Right. So when you started to look at that from an institutional investment standpoint and that sort of in between hotels and STR, if you wish, and look at the different tech stack, when you started to do your research, as you said, and looked at what is out there, what was sort of the key, let's call them feature sets or functionalities that you were looking out for to make that comparison? And what kind of areas did you actually research?
Yeah. So we looked at two or three big categories. We looked at essentially hotel vacation rental PMSs as one bucket. Then we looked at long-term rental PMSs, the existing ones, as a bucket. And then we also looked at a third bucket, which was there's always somebody who's doing something at the frontier of this.
Yeah, of course.
How are the people who are doing it actually doing it in practice? Because if the first bucket and the second bucket aren't working, what's going on in the third bucket? And what we found in the short-term rental bucket, this is very nascent as well. This is at the start of Guesty and start of Hostaway and other things. Most of those platforms were fully focused on vacation rental, as they should be. And we're actually just trying to figure out like multi-channel, figure out all of that kind of stuff. But actually, for example, nobody was anywhere in multi-unit inventory, which is really important. Compliance and guest vetting in a legal and technical sense was almost non-existent. Even today, I still think a lot of it is based around the concept of a single owner in a property with a villa in Barcelona, for example. But their compliance requirements and their reporting requirements are fundamentally different. If you're in Spain and you are over 6 million in revenue, which is most of our customers, you have very specific reporting requirements about invoicing, regulation, and things that the hotel and vacation rental industry hasn't solved for because it's just not their side, it's not part of their job. And then operationally, there's a huge complexity around being around long-term residents at the same time as short-term rental and how you balance the two of those needs. You over-index in vacation rentals for one and not for the other. And then I think on the long-term rental side, you actually have kind of the exact opposite. But long-term rentals ultimately started as year-long leases, splitting it into months. But there's been no construct in those long-term PMSs for down to the minute, down to the day, down to the night. So most of those platforms, even today, can't do daily pricing. right? So you're obviously immediately unable to think about the modern world. And there's actually a good reason for that, because we thought, is this going to be one of those things like, oh, Google will just build it once you've identified it? But the reality is they need to re-architect every single element of that platform. This is not a point solution. To your point, why I think unfortunately a lot of people have decided to start in like a guest app, for example, is because it's very discreet. You can kind of build it and sell it. But if you want to change a big institutional long-term rental PMS or a big institutional hotel PMS, and you need to do something as complicated as changing to daily rates or changing finance flows, you have to change every single module. You have to change the guest communication module, the finance module, the invoicing, the booking, the whole way through the stack. And that obviously becomes, at the size of something like Yardi, an unrealistic project. It would be hundreds of millions in many, many years. That they're not going to do that. So we were like, okay, well, hotel seems to be very focused on itself, and actually vacation rental is the new exciting frontier, which totally makes sense, and some amazing businesses have been built there. Long-term residential is not innovative, but is much more of a very slow long-term play. But again, I totally get it, and to be honest, might have done that if I'd been running those businesses. Totally understand that. So there's something in between. And then the only businesses we saw doing this were honestly quite a weird world of do-it-yourself master lease type models who would grab a summer or they would grab 1 year somewhere on the fringes of service department type businesses, and they would really just do it quite DIY, bending another platform, no real tech. And really it was the sort of precursor to the Sonder model. And I think there's a lot of inherent risk in that, and that wasn't interesting for us. We didn't want to do financial risk, and I can talk about why I think it's a very dangerous play to do that, because you compete with the owner. We wanted to solve tech across all of those three buckets.
Not an easy undertaking from what I know, especially in long-term rental. You've been very diplomatic, Fred. I would call it archaic. We've looked with the private equity, we looked at a roll-up in the long-term property management space. What can you automate and what can you do better just in the Swiss market alone? Some of these long-term property management companies are using archaic software, archaic processes. It's just about, sending a monthly invoice to your tenant, and it's extremely slow. But now everything is started to converge. But before we go to the converging of spaces, if you wish, I would love to talk a little bit about Lavanda, what is Lavanda and what isn't Lavanda. And as we all know, and to our audience as well, STR Global Unlocked is not a pitching platform for technology. It's about talking the real challenges within the STR industry. But I think Lavanda is coming in from a very interesting spot in between. And it's interesting when you started talking about the buckets, you put hotels and STR in the same bucket. And I would have actually expected you to say, we looked at the hotel bucket, we looked at the STR bucket, and we looked at the long-term rental bucket. And even companies like RealPage haven't been able to make significant inroads within STR either. Yardi hasn't dared to do anything here either. And these are the US operators. Obviously, there's different softwares in Europe, but I find this space super intriguing, Fred, and that you've chosen with your background that space. And I see massive opportunities in this space as the businesses are converging. And we will talk about flexible living in a minute as well, and how the different models out there are starting to converge for different reasons. But let's talk about Lavanda. What is Lavanda and what isn't Lavanda when we talk about property tech, if you wish?
Yeah, very happy to. So we, as you said, decided to focus on this very big vision, big problem, but we're very aware that you can't necessarily build all of that at once. And we wanted to build out a full short, medium, and long-term rental PMS that could genuinely do all three of those in coexistence. And that was generally focused for the people who actually can do those strategies, which through a period of kind of journey and investigation, we really realized were institutional real estate owners of significant scale. So really we work with people of, at a minimum, sort of 500 beds or 500 units, but really more typically tens of thousands of
even
beds.
Starwood Capital and some of these players,
Greystar, Unite, really, really big players. And what they need is a grown-up B2B partner who can do enterprise level software and SLAs and everything else. And that's all really important because they cannot take a risk on anyone. And what we started out was with our short stays product. So that actually does only solve short-term rentals. Because we had to work out some entry product into the space. So we identified this white space, but it is essentially a sort of a parallel PMS that exists alongside a Yardi or a RealPage, and we work alongside every single long-term PMS out there. But it does everything in the context of multifamily and student or flex, who all have their nuances. So it has booking journey, everything else, all the way down. And we also wrap services, because it's not enough to just give the software to these businesses. Most of them are not able to necessarily do things like revenue management. They're not going to be teed up to do underwriting and analysis of what the revenue impact can do. And there are certain elements of like guest experience and other things that they need support in, at least initially. So we have a version of the product where essentially it's almost like training wheels, where we do a bit more of it so they can try short-term rentals blended in. And then they can kind of take those training wheels off and bring the software in purely as a short stay aside, but it's entirely designed for their business. The language is in their way, the finances is reconciled in the way they need it, the compliance is there, everything is able to be alongside a Yardi or a Starres or whatever. And then we essentially have our, as we grew and built that product out, we then fulfilled our vision of doing a full short, medium, and long-term rental PMS, which is now in the market. And now actually we have customers who come just for that. And that is basically a pure tech property management system where you can do short, medium, and long-term rentals to your heart's content. Generally focused on Europe, because actually, and we'll talk about markets and other things later, but that's where we see the most interesting blend of convergence and also the highest barriers to entry, candidly. And we for our sins, we like complicated problems. And so within Europe itself, there's so many different nuances to all those different factors. And that's interesting for us to solve.
Wow. I have so many thoughts coming to my head just listening to you. And now I also know why you and I have met very early in your evolution, because you were doing the short-term rental model. And then Fred disappeared because he focused on the rest of the business. And in a way, funny enough, now today you're with STR Global Unlocked, and we've gone full circle for many different reasons, right? And I had the pleasure to interview Jaja Jackson from Iconic Capital, who funding one of the largest flexible living companies in the United States. And we're talking about, I interviewed Jeff Hurst, who's the CEO of Furnished Finder, where it's all about midterm living. We're facing regulations in the industry which pushes the STRs to think about what do we do with our assets and what do owners do with their own assets. So this is super interesting and very timely, I think, Fred, that you and I are having this conversation today for all these reasons. And, you never know when you end up building a product and then realizing the convergence is actually pushing the software. And you tackled a big challenge to think about the complexity of what you have to cover within your platform. This is substantial. And you deal with different cultures, I guess, different DNAs, fundamentally different DNAs. In STR, everything is fast and uncontrolled and low entry barriers and bow. And then you have the long term, which is an archaic industry. I mean, I remember when I had my first 2.5 room apartment, long-term rental, and I had to give it back after I terminated the lease, and I had an inspection. It took me like 4 hours to hand it over to the tenant, to the owner after the inspection. So, this is still that you're bringing a lot of different businesses together. You talked about student living. You talk about flexible living as well, which we'll talk about more in a way. And then you have institutional investors are highly sophisticated, have different type of expectations. What was the challenge in building what you have built, and where is the challenge going forward?
Yeah, well, great question. I think you're right. We had to pick a kind of persona to sort of start with and align with, because I actually love the STR vacation rental world because it's full of entrepreneurs, really exciting, very, very dynamic, lots of really cool things going on. But in many ways, we almost had to sort of, be part of that, but step back and really focus, because we were not taking that world and just expanding into long-term rentals realistically, because that's not how it actually works in practice. What we're doing is we're going to the investors and the operators, so actually going all the way to the other side and saying, if you want to be doing this, if you want to address this trend in the market, how can you do that? And slowly bring them to the STR world and create a really safe environment for them. So we fully divided our personas into the investor and the operator. On the long-term rental side, they're two fundamentally different businesses, personas. Some are vertically integrated, but a lot of them are not. They are split. The investor persona, to your point, needs a highly accurate and sophisticated data reporting kind of suite that gives them the confidence about this, because ultimately they are in the asset allocation game. They are allocating assets, they are monitoring those assets, and then they are potentially trading those assets at a point. And the revenue and the stability and the consistency of that is really important, because it implicates the cap rate. The cap rate being essentially the multiple that you sell on, and that cap rate needs to not be diminished by some of the concerns around short-term rentals. So it's a really delicate trade. And I think if you don't understand that, or you don't have people in your team who understand that, or consultants around you, whatever it is, I hate to say you're going to fall at the first hurdle, because any fear that you're impacting the value of the building is meaningless on the income, because ultimately most of these things trade maybe 2%, 3% cap rate. That means that the building income is worth 50 times the flow of the income. So if you add 1,000, right, you add 50K, but if you didn't change that multiple to 40 or 30 or 20, you've ruined the whole thing, right, on the building. So understanding the investor persona as a separate persona is super, super important. And then the operator scenario is completely different. Ultimately, historically, they have run buildings very lean, to your experience,
Of course.
for obvious reasons. But there is a change happening, and the change is coming in that they are looking for ways to add value, but they're doing it in a much slower and calmer way. It's the type of thing that's planned over 5, 10, 15, 20 years,
Yeah.
which fortunately for a startup is death, right? You can't have a business plan where your first customer comes on in 5 years. You have to be incredibly thoughtful about how you build that business. And we have always had to build for that long-term plan and vision. Otherwise, you just run out of capital. And unfortunately, we've seen in the last 5 or 10 years, a lot of businesses who try to address this market go out of business or fail, or try and cheat using things like master leases, where you then remove one of those personas, right? Because essentially you become the operator and you've done a deal to get rid of the investor persona. But the problem there is you've then taken on all that risk on a relatively short time frame, and you have a potential risk scenario there. So we always start with the institutional real estate persona as our absolute core, and then everything is about defending the value of the asset, but bringing value into that. And that requires a lot of go-to-market kind of thinking, a lot of positioning, a lot of brand positioning, and then a lot of revenue analysis before you've even got to actually doing anything in the building. And then within the building context, everything you do, yes, you can add some revenue, whether it's filling empty units or bringing in midterm stays, but it always has to be done thinking about the resident blend. What is the impact on reviews? What is the impact on scoring, the cost of acquisition on long-term rentals? So you can quickly see like every single step sort of has a multiplication factor of times 10 on the complexity of what you're doing by bringing in these different audiences. And, on dark days, I sometimes wonder what mad mission we're on. But, in doing hard things, there's value, and we do believe that. And I also think if you don't think about that stuff, you are destined to fail. If you just have a long-term rental business, you just shove some holiday lets in, that's where it goes horribly wrong. And the systems have no idea what's going on and don't understand the difference. That is kind of the reality of what's happened for many, many years. And then there's no wonder that gets rejected and people cancel it and stop it, very quickly.
Well, that brings back a lot of memories. I remember very well when a keynote speaker at one of the RealPage user conferences talking about STR. I literally had to come in with bodyguards being protected. When we talk about these long-term rental property managers thinking about, hey, this is the total devil. We don't want any of that in our buildings. And that's the first thought that I had when I was listening to you. And the second thought was just my recent conversation with Ja at Iconic, and I said, "What is your biggest challenge at Iconic?" Because they're raising capital for the flexible living business model in the United States, and that's where I hear a very different view from where you come from. Because Jaja said to me, our biggest challenge is the educational process to some of these investors to talk about, long term is a no-brainer, right? That's an easy calculation. You have a building, 500 apartments, you can calculate that through. With an occupancy rate, average length of stay, 18 months. And then you can calculate that very easy. And then midterm comes in, and then STR comes in, and then it's about How do you calculate the ROIs for buildings like that? How do you balance that correctly? And that's, I found super interesting from your side, but it seems that the persona that you're targeting in this conversation is that market in Europe in that combination is in a way already more mature. Would that be fair to say?
Yeah, that's a really interesting observation, and I knew Jojo as well back in Airbnb days, and he's a perfect persona to bring that forward into the US, and they're doing great work there. And you're right, counterintuitively, despite the US being a much more mature multifamily market in some ways, they are also quite conservative in their mindset, particularly on the investor persona side. And in
Okay.
Europe, there are reasons why flex is a bit more thought through, maybe I would argue, and people have kind of matured a bit, partly because in southern Europe locations, hospitality is obviously quite in the culture in terms of like there's been tourism, there's a lot more norm that there's a lot more high value tourism, particularly in the summers. And actually, interestingly, a lot of multifamily assets have specific permits and permissions for all year round parts of the building to be short-term rentals. So what we call flex living in the institutional real estate market, where people are specifically doing buildings of short, medium, and long term, so a bit like Central, that is actually quite often in Southern Europe. Despite how hard it is to get planning in a sort of cultural, legal sense, they're actually quite forward thinking in terms of that because of those market dynamics. Equally in the UK, we do have certain places like Dublin and Edinburgh because of the fringe and other sort of travel reasons, where again, people are a bit more culturally kind of on top of that. Okay, actually this can work, and it's been going for many decades and stuff like that. So, and also like finally what we notice heavily in Europe, because some of these institutional markets are quite new, like build to rent, for example, in the UK, it's quite new. It's only really 10 years old. In Europe, there's a lot of sort of publicly held buildings becoming privately held, a little bit behind the scenes, but you see a lot of JVs with universities and investors. And so our thesis is that Europe is actually going quite quick change in the way the market is being held from quite a sort of left-leaning socialist world where everything was publicly held. That is not affordable anymore. A lot of assets are coming into the real estate market and actually becoming increased into these 10, 50,000 bed portfolios.
Wow.
But because they've all been built in the last 5 or 10 years or being built now, everyone who's running all those businesses don't have this kind of mindset, oh, well, we've always done this like this for 50 years. And so we're seeing people way more open to STRs within that context, as long as all the stuff I talked about before is held, that it doesn't damage the value, all that kind of stuff, right? So if anything, we see a lot of these operators being really interested in this. But you're right to go back to your original question. The investor persona needs something fundamentally different from the operator. The investor persona is all about that spreadsheet and how do they build confidence around the numbers in that spreadsheet? Because midterms and SDRs also have fundamentally different cost profiles. The mix effect is different. The cost of acquisition is very different. You have to get booking.com fees or whatever it is versus like, direct costs, website, all that kind of stuff. So there's a lot of and they're naturally conservative, as they should be, because they're custodians of pension money and all that kind of good stuff.
That's a good point as well. Huh?
Yeah, I think never forget as well, like there's something very different about, I don't know, a couple of people coming together to do a bet on 5 villas in Barcelona or something. That's obviously money and that's important, but that is obviously at the end of the day an SME. It's a small business and it could do well, could do poorly. But these are all £100 million asset type things, all backed by very conservative money. Pension money typically is somewhere up the chain there, and they need to guarantee essentially that return. But they cannot afford for the ADR to suddenly change because you did the wrong calculation.
Yeah, that's incredible and makes a ton of sense. And I think the pension aspect of it to bring in is that creates a lot of clarity very quickly for that, slow money and long-term money as well as, can't afford any volatility with it in its own returns as well, which I think is absolutely key. So before we move on, just a very quick question. Who at the end of the day is your customer? Is it the operations? Is it the property manager that predominantly does long-term in the past, or who is your customer?
Typically, it is a long-term property manager operator who essentially buys the product with the investor signing off on it.
Okay.
And they might be separate businesses or they might be vertically integrated, but they are typically specialized in that space. And then we are essentially trying to sort of bring new technology through the adoption of STRs. Because the nice thing about short-term rentals and mid-term rentals is not just the revenue and all of that kind of stuff. You're actually also bringing in really cool technology, right? There's tons of great stuff. So it's a double whammy, and we often think about it not like bringing nice tech in behind the back door, but kind of, and then being like, well, look, you need, I don't know, for example, super dynamic pricing or super dynamic guest communication and resident pools. Well, you definitely need that for short-term rentals. So let's of course give that to the long-term rentals, right? Like, there's no reason to not do that. So I think people adopt these flex strategies not just for the financial benefit, but they also do genuinely want to bring technology in. But it doesn't economically always make sense in a long-term rental business on its own. So that's another sort of nice part of this.
Yeah, that's great news also to our technology listeners of the STR Global Unlocked podcast. I have the honor to serve on different technology boards, and we always have conversations, where else can we go with our businesses, right? And we're underestimating that. And I think that's an interesting point you raised there, Fred, that this industry is definitely an opportunity to bring in different technology, because it hasn't been very tech enabled, because it's more static, it's longer term, whatever. But that doesn't mean that some of the technology that STR has built doesn't have needs or opportunities within the mid and long term places as well. We can even talk about door locks, automated door locks, things like that. I mean, a lot of that stuff has a space in that industry as well. Being mindful of time and talk about our audience as well, before we talk about competition and how the space is changing overall, I want to talk about leases. You know, we've seen, especially in STR as well, a lot of business have grown over to taking leases risks, lease arbitrage. We've seen, now Sonder also putting the last nail on the coffin as well after, a spectacular SPAC of over $1 billion. Blaming Marriott for it is a bit short-sighted. I think there's other reasons why this didn't work out, and others like Lyric and Stay Alfred, and we saw many of these lease arbitrage businesses. And even for smaller operators, it's still a good opportunity to get more supply by committing yourselves to a lease, which we also call rent to rent. In your view, coming more from the institutional side of it and your investment angle, do you think for the STR business now, more than for larger business, that the lease and the rent-to-rent business is dead? It's over?
I think it is very largely dead. However, specifically for the relatively small STR business, I actually think there's an opportunity, because the reality is Sonder and these other businesses were dead 3 years ago. Okay, they've been zombies for a long time. And one of the biggest problems, I believe, because we looked at this endlessly. Obviously, it was a very attractive way to grow. And actually, there was a lot of capital banging on the door saying, look, we can give you all this money and, go do this. And one of the biggest problems for me is that at scale, doing the analysis and getting this right, especially when you go beyond like your geo that is your backhand, it's incredibly difficult, because essentially you're running two different businesses, maybe even three. You're running a finance business, which is kind of head to head against the investor, trying to figure out where you can pick a lease better than the investor, right? Because somebody's doing the other trade of that lease. Then you're running an operational business, which might be, in the Sonder example, divided across the whole world. And then you're trying to figure out tech and brand and other things. And I think the fundamental flaw in Lyric, Sonder, all of those, is the argument that the tech and the brand would somehow magically create this premium that would then go above what you pay for the lease. And I just don't believe that's true. I don't think there's any demonstrable value that branded experience in a sort of global aggregated way creates a massive premium. Maybe a small premium, but on a massive premium. However, I think leases where they do make sense are where you have a local market that you really understand. So for example, if you have 100 units across Berlin and you are largely single family or vacation rental, whatever it is, and then there is an investor for a reason who would be up for giving a lease on 5, 10 beds, relatively small amounts, so the risk is not crazy, where you understand that market higher, because it's about asymmetric information. It's about you understanding that as a short-term rental and understanding the cost profile of that, you can make money on that over a period of time. And I think in that scenario, that business is almost like back and possible. But I think you have to be incredibly selective. And in reality, it's all about whether you find a good deal. Because as soon as you cut that deal with an investor, their negotiation and their mindset changes, right? Because ultimately, that's a fixed income. They then have no interest in the success of your business. And really, all they're thinking is, if you do really well, in 5 years, I want to negotiate that back.
Yeah, of course.
That's the
And they
reality.
ask for a premium if they know you do short term with it anyway.
Exactly. So I think there's versions of that. If I was a small operator, I'd also actually be looking at blended models where you maybe offer a sort of a min and then a partial rev share. That can be quite attractive because you can say, look, I'll definitely make, I don't know, 500 euros a bed, but actually I think this is worth 1,500, and so I say, look, I'll guarantee 500, and then we'll split with a sort of, I'll succeed, and I think that stuff is actually a really good way to lock in inventory, because one of the things that's obviously, without teaching, etc., is if you're building on single family owners or all that kind of stuff, you've got the whole regulatory problem, right? People can wake up tomorrow and change their mind. Owners can sell their property. It's hard, right? Acquisition of customers and retention of customers is hard. So selective leases can create a really nice bedrock to your business where you can then kind of do those. But you have to be very smart. I do think any scaled version of that immediately fails, though, because the money creates its own problem, because you then have to go get leases. And that was always the problem with these lyrics.
Yeah, exactly. Yeah.
It went from a smart deal to now I have to get 100 million out the door. And then before you know it, they've signed every lease going at double the rate.
Yeah, I could not agree with you more. I have the pleasure of working with a lot of small Airbnb hosts here in Switzerland, and we will run an academy where we consult them about these models. And it's so funny. I just recently exactly said, a mixed model could be very interesting in having a certain base and then do a ref share to sort of de-risk a little bit also that conversation and give something back to the owner at the same time as well. So that's super interesting. Now let's talk about convergence, right? So with all the conversations we recently had and looking forward with regulations where there's 257 property managers in Barcelona who might be out of a job in a couple of years, they're thinking about, hey, what is happening? Midterm is an opportunity. We had recent conversation with Furnish Finder, a midterm marketplace in the United States, and property managers and STR in the STR space also think about, hey, how can we reduce churn? How can we keep our owners happy and everything else? And I do see that the convergence within these different rental models is definitely happening. So multifamily, STR, what is your view on that over time?
Yeah, I think it's a very valuable skill set if you can kind of start to be able to do, more things. But I think you very much have to pick your size of customer that you're working on. I think one of the reasons why co-living, or increasingly in our world we call it flex living, is quite attractive is it's relatively small scale. You can start to build a business where you take on sort of 5-10 bed places and get a bit more into the community thing of offering long, medium, short, and it's a bit more sort of manageable. We think that is definitely something that's going to grow a lot in the continent, particularly at the smaller end of the scale. And it is genuinely solving a need, which is, look, I want to go work in Barcelona for 3 months, or I've emigrated from the US and I can't decide on, over the internet, but I want somewhere that's sort of professional looking and create a community. And I think the ones that do the best are ones that also try and create a differentiation, some reason to do it. And it could be like, look, this is going to be very business orientated, like it's all going to be startups, etc. Or do you know what? The opposite is actually going to be for, I've seen ones about like exercise and like health community ones and stuff like that. So you start to try and create a flavor of that. And I think you can do that relatively low scale and quite effectively. I think what we're seeing at the tier above that is it really depends by the industry what they're trying to do. So student, for example, is heavily adopting short stays, partly because the cost of education is becoming very expensive. So, every country has their own version of this, but whether it's tuition fees or just accommodation rents going up, students by definition don't have a lot of money. And so they're getting increasingly pressured by cost of living and are finding student accommodation more expensive. If you take, rather than giving people a 52-week lease, you give them a 42-week lease, and then you do short-term in the summer, suddenly that becomes more affordable for the student. You can monetize buildings that are often in great locations because by definition, they're near you.
Yeah.
And what I'm very passionate about this, and it's a big part of our business, but it also brings low-cost accommodation into the market, which is great because student stuff is relatively cheap. We have stuff in Barcelona, all these great locations, and they might be like 60, 70 euros a night. I mean, nowhere is that right nowadays.
No.
So you can bring that stuff into those difficult markets, especially where there's regulatory challenges. That's really cool. And local regulators and local councils and communities are going to be much more supportive of a blended building
Of course.
when it obviously brings in stock. And then I think the last group of sort of multifamily build to rent, it's also very split by geo and dependent on the pressures of supply and demand. A lot of Europe is trying to figure out ways to build actually at the highest levels. And if you can take a building that maybe the numbers don't stack with just long-term rentals, but you can bring some service department in and kind of blend the business model, that can take a building from, you know, a brownfield site doing nothing and actually getting to the point of building it. And that's the holy grail for me, where you can actually bring more buildings into fruition in places from Lisbon to Copenhagen or whatever, and create a really positive story about STRs. Because I think, you know, like everyone, very tired of seeing STRs get beaten up and, you know, vilified across, particularly in Europe. And I think there's a very positive story you can bring about development and, you know, investment that is really, really important without confusing the story around long-term housing and the threat against long-term housing. And I think Flex has a way to do that by saying we're not taking inventory away, we're actually increasing the overall amount of inventory in the market.
Wow, incredible takeaways, especially to our audience. Sounds so simple, Fred, right? But here comes the operational challenge, the complexity. So let's talk about that for a second. You know, this sounds super easy and makes a ton of sense, but that comes with operational challenges. Where does that break? And what does let's say, a more traditional property manager need to think about expanding into a more flex-based business model, flex living-based business model?
Yeah. I mean, I think at the very start, it has to be intentional, and it has to be intentional in terms of your brand and your people. If you have somebody who is a long-term rental manager of a building and has had 10 units and that's the only thing they've ever done, they are not going to be happy if the investor comes and says, can I put some STR units in? And you have to be very, very thoughtful about bringing. So, for example, a lot of long-term rental businesses are bringing hotel people in because actually in their mindset, they're very well trained, they're very hospitality, they're very kind of up for the new challenges with technology. So one of the first things you need to do, actually think about people, because so much of this is about mindset and what you consider a reasonable thing to happen or to occur within a context. The second thing is obviously technology. Like, I think if you don't have the right technology in place, you're going to really, really struggle. And you almost, but I think at this point, that's just a non-starter. If you don't have a technology system that can both have a direct booking website for long-term rentals, but also connect to Airbnb, for example, and communicate with those, you're not going to go anywhere fast. And then what a lot of people are doing now is also thinking about how can you slowly introduce this over time as well, because that de-risks the operational side. So by, for example, bring a couple of summer units in, just to kind of test the waters, because then when you are looking at partners like cleaning and other things, you can ramp them up over a period of time for your building and your portfolio. It's much trickier if you're bringing kind of 1,000 beds in, doing 300, that's like a full, then you're basically running actually what those businesses tend to do is operationally actually split themselves up a little bit within the building. They say, okay, I'm actually basically got a hotel team and then I've got a long-term rental team. And yes, from an outside perspective, it's all one, but actually in practice, we're running those almost separately. And then I think that is, there's no doubt that's really complicated. But what I think in the sort of smaller scale co-living is you are seeing that kind of hub manager, and they are then able to kind of slowly manage that mix of short, medium, and long. Because if it's only 10, 15 rooms, you can be much more thoughtful about that.
Moving on from operations, the next one is immediately risk and liability, right? So when we, let's call it, infuse short-term rental into multifamily or long-term living property, liability and risk are becoming an immediate conversation, to the point I mentioned about RealPage conference. I was speaking, and the questions I was being asked was actually quite mind-boggling. What kind of risk profile they thought that STR is bringing into the conversation. What do short-term rentals need to think about that? Operators, about risk and liability, and how can they protect themselves?
Yeah, I mean, it's a great question. I think a few different factors. So, there's kind of the real risk, and then there's maybe, let's say, the perceived risk. So I think the real risk you do have to just eliminate through insurance agreements and all this kind of stuff. You have to have it fully insured.
So that's like, you have to have that regardless, where
Yeah.
in an individual relationship with one homeowner, the
Yeah.
homeowner probably never asked, do you have a liability insurance, or what happens if somebody breaks his leg in my property? Whose responsibility is that?
Yeah, exactly. And I think, you know, there can be a bit more of a gray zone there in the individual homeowner,
There
but I
is.
think if you yeah. But on the institutional side, you have to not only for but basically for your whole business protection. I mean, in the early days and you know, to a large degree, we basically don't work with people who don't insure themselves, or we insure it or something, because the biggest risk is actually not, you know, parties and stuff like that, because you know, frankly, you probably want to go have a villa if you want to have a party. Like having a party in a small flat in a multifamily building is not actually that interesting, and the number, and it's more easily controlled as a building. The biggest risk is somebody leaves a tap on and goes out for the day, and you know that water goes through 7 other units, and like there's all the rent loss and everything. Like that's the real loss. And while you can have early conversations that are like, "Hey, look, I'm a small business, and like we're figuring this out," the reality is, if that turns nasty, then you know suddenly everybody's in the contract, everybody's like asking where the insurance is, and cutting corners early on is not an option. So that's really really important. Guest vetting is absolutely critical, not just to reduce the amount of issues, obviously, as all good vetting should, but again, to have an audit trail, to understand the context. And also because, you know, if things happen, like these are communities with hundreds of people in them, like you need to be able to justify what happened and, you know, what went on. And, you know, and also there are also a lot of regulatory specifics. Like, for example, a lot of student needs student only ID verified and stuff like that. So there's a whole subcultures of different things that all need to be verified. So there's that again is a non-stop. You have to have all of that. And I think historically people have cut corners in that to try and kind of get going or whatever, and that's come back to bite them. And then I think there's different stuff which is about the perceived community risk and things like that. I actually think that's often massively overplayed, and that's much more about education and explaining and case studies and talking to people through that. And I do think, particularly in Europe, I think the market has moved on a lot more. People are way more comfortable with these kind of blended things. The US is oddly bifurcating into certain buildings and operations, like for example, where built, you know, friendly Airbnb's built friendly buildings things going on, or Sonder or Placemaker, where it's great. I mean, they're great communities, like really cool buildings. Like you don't feel that it's strange or anything, but people have maybe a bit too much said, okay, well, that's for them, but for us, that doesn't work. And I actually think a lot of those cultural reasons are slightly made up and is more an educational piece than I think is any real facts.
Interesting. Time is moving very rapidly, so we need to be mindful here. Before we wrap this up with a quick rapid fire, you know, let's look into the crystal ball. And maybe before I do that, I even want to mention this risk and liability question and what tragically can happen. Also, we've been reminded with what happened in Switzerland in a bar on the 1st of January. You know, not that, you know, of this magnitude can happen in a rental, but it just clearly shows that whatever is something that is never been expected, a horrific incidents, once the cause is cleared, it's all about liability and responsibility and how can risk being mitigated. And that's something, especially in the STR space, because we deal with individual homeowners, is something that is totally underestimated until the shit hits the fan, and then it's unfortunately in most cases too late. How does the space look like in 3 years? I mean, 5 years, we don't know what that means in our world anymore. But if you look at the multifamily space in general and what we talked about, how does the residential real estate, and maybe focusing on Europe, is going to look like in 3 years out from now?
Yeah, so I think we're very clear where we believe it's going. We think, let's say 5 to 10 years forward, we think a lot of markets where they typically have done less short-term rentals will be increasingly doing it. So I'm thinking like France, Germany, Nordics, who at the institutional level have done this less before. They are increasingly looking at Iberia and the UK and saying, okay, well, look, this does actually work. Long-term real estate is doing this really well. And what we're seeing is operators who are now sizing up a European-wide strategy. So no longer just specifically in one country. They're increasingly long-term rental operators who are raising very, very big funds to build 50,000, 100,000 plus portfolios across all of Europe. So I think Europe is on a journey to become a bit more like the US, where the average player size is really, really, really big, much, much bigger. And what I think in that is a really interesting journey where if it can be played right and everybody is playing it right. They're doing it in a mature way. They're taking STR seriously. They are doing insurance. Actually, they are being very, very responsible about all this stuff. What it will do is slowly create a culture where the regulator and planner and other people start to trust the industry more and more. And that's actually happening. We're seeing that a lot in the UK. We're seeing that in Spain, which means that more permits will be issued, more allowances will be given. And if you fast forward, what you can imagine is a lot more of the STR demand and supply actually happening in a regulated environment, in a bigger, more safer, from a sort of, I'm talking from sort of regulator perspective and a from public sort of demand, outcry, etc. perspective. The last sort of battle is really about this perception about, does it take away from long-term housing or not? And I think that's a very tricky one. But the market needs to get that right in order for it not to kind of have a backlash. But if it can get it right, and it can be seen as a driver of this forward. And actually, for example, a lot of people talk about flex living. They don't talk about Airbnb. They're very careful about the brands they talk about. They talk very much about this as them bringing short-term rentals and midterm rentals into this in a safe and compliant way. They don't associate with specific brands, and they associate more with community. And I think that's, if those things play out right, and we believe it is, this market will be dramatically higher. Because if you just look at how much is being built, how much is coming into the market, there will be a lot of stuff, and then that will translate through to a lot of STRs, and that will translate through to a lot of guests.
This is an incredible closing note. I love the acronym flexible living a lot better than the other one. So that's a great one. Thank you, Fred. And I'll remember that. It's going to be a challenge, though, for traditional property managers in the short-term rental to capture some of that growth and these opportunities. But it sounds exciting. So before I let you go, we'll do a quick 90-second rapid fire with you. I'll give you one question and two choices, and you give me one answer. And please keep it as short as you can. You ready for it?
Yep.
Fixed leases or flexible inventory?
Flexible inventory.
Hospitality mindset or residential discipline?
I think hospitality is winning out. I think that mindset's coming in strong now.
STR operators entering multifamily, smart or dangerous?
I think it's smart, but I don't think they'll be successful at scale.
AI in building operations, hype or real value?
Real value, for sure. Big believer in that.
One word to describe the future of living?
Flexible, has to be.
That was easy. Thank you very much, Fred. The last one was definitely an easy one. Ladies and gentlemen, thank you very much. Fred, it has been a fantastic conversation. What stands out for me is that the flexible living isn't a trend. It's a response to how people actually live, work, and move today. And I guess the winners won't be the ones chasing ADR, but they'll be the ones understand operational risk and especially long-term value creation. I think that's at the foundation of that. So thank you for being such a grounded real estate first perspective to this conversation. It's been an absolute honor to have you on STR Global Unlocked. And ladies and gentlemen, thank you very much. Fred, it's been a pleasure.
Thank you, Simon. Brilliant. Thank you.
That was STR Global Unlocked, where we say what others won't. If you got value from today's episode, send it to someone who is still playing it safe. Follow the show and get more global insight at ajlatelier.com. The globally recognized STR consultancy I founded and that proudly brings to you this show. More bold conversations are on the way, so stay tuned.